Welcome back, everyone. We've had some pretty big news in the market this week with AMD and OpenAI announcing their partnership. We'll take a look at what this means for AMD and how it's affected our portfolio. And then I've sold a stock this week, which I wanted to go over the reasons for selling that stock, and then some reasons as to why, in general, I would sell a stock. And finally, there was the drop in the market on Friday that I wanted to dive into. So, without further ado, let's take a look. Now, taking a quick look at the portfolio, we're up to 4,700 roughly with a total return of 750. Looking at AMD, it's up for us 40% and it was actually up to 55% a few days ago, but it's dropped down since the Friday drop in the market. Amazon, Novo Nordisk, and Alphabet are all pretty stagnant for us. And then ASML, we'll do a separate video on ASML next week, a more detailed video, but it is up a good 22% for us. So that's doing pretty well. Looking at the news or announcement by AMD and OpenAI. So OpenAI is set to deploy 6 gigawatts of AMD GPUs based on a multi-year deal. And initially they will deploy 1 gigawatt of AMD Instinct MI450 series GPUs starting in the second half of 2026. Also, as part of the agreement, AMD has issued OpenAI a warrant for up to 160 million shares, which will be vested after specific milestones. This part of the agreement, I don't actually understand why AMD would do this, but they do tie their performance to OpenAI's performance, which should encourage both companies to execute better on their deliverables, which I think is a good thing. But I still don't really understand why AMD would offer up part of their company as part of the agreement, as I don't think they really need to. However, I still think this is a great deal for AMD as it further clarifies how they increase revenue over the next coming years. And then as companies look to reduce their reliance on Nvidia GPUs, this deal does showcase that AMD is a viable option. And I think we're more likely to hear deals like this, and each one will have a big effect on the stock price. Now, looking at the position that I did sell this week, I sold out of Mastercard, which was the smallest position in the portfolio. However, it was one of my oldest positions, and as you can see here, I bought into Mastercard in 2023. This was actually a few days after I opened this account, and as you can see here, back then my buys were all very small, and the only strategy was to buy into dividend paying companies. Back then, I didn't look at what the company was doing or understand much about any of these companies. But then again, when I was just getting started, I was excited to buy into anything at that point. So it just happened that MasterCard was one of those companies. And I did continue to buy MasterCard until December 2024. In terms of why I sold out of MasterCard, it was a small position that was up 17%. And I thought there was more value into redeploying that capital into one of my current holdings or looking for other opportunities. And with the market down on Friday, if that continues into the next week and beyond, I think that will reveal a lot of opportunities to buy into other positions at attractive prices. Moving on to some reasons as to why I would sell a stock. Now, I wanted to outline these here as I've developed them from starting to learn to invest this year. Now, these will definitely change over time as I continue to learn, but I think it'll be useful to track them and develop them through this channel, and I hope they'll be useful for you as well. Jumping into the first one, declining revenue growth. As I am going after high growth companies or stable revenue generating companies, preferably in the double digits top line revenue growth, if I do sense a weakness or a steady decline in revenue over time, it will be an indication for me to sell. Another reason would be changes in management that I don't agree with or believe will perform well. Now, even though I think it's important to let new management prove out their plan over time and see if they'll perform well with the company, it could be an easy tell if the management has poor track record or they come in with changes that you don't believe will benefit the company. So if any of those cases happen, I would be more likely to sell as management is probably the most important factor in a company. Next is when there are other opportunities. Now, this was the case for me with MasterCard this week. I felt like there was better opportunities in my other holdings to accumulate more shares there or find something else more likely to grow faster. The second to last one of my reasons to sell a stock would be when there is a mistake in the original thesis or false assumptions. If this does happen, it would reduce my confidence in the holding, so I'd be more likely to sell, and then a combination of this and one of the other reasons would incline me to sell even more. Finally, the end of dislocation. So if I bought into a stock where the only reason for me really buying it was because it was dislocated to a intrinsic value that I come up with or a target number, if it does reach that target value, I won't hesitate to take the gains and redeploy elsewhere. This does bring me nicely to a quote by Peter Lynch from his book One Up on Wall Street. So he says, by successfully rotating in and out of several stalwarts for modest gains, you can get the same result as you would with a single big winner. Six 30% moves compounded equals a four bagger plus, and six 25% moves compounded is nearly a four bagger. If these type of opportunities do come, I will be trying to make the most of them and wouldn't mind selling for a modest gain. So those are my reasons for selling a stock. Let me know what you think and if there's anything else I should be adding here. The last thing I wanted to cover for this week was the market downturn on Friday. We have several factors that I think are combining together to cause this. Firstly, we have the US imposing an additional 100% tariff on Chinese goods starting on November 1st. And this was prompted by China announcing new export controls that would take effect next month. So we have this kind of trade war going on. Then the next thing is the government shutdown that's still ongoing with no end in sight, and compounded onto that is the layoff notices that are going out to federal employees. So we have a whole uncertainty about this situation. And then finally is the market commentary that we've been getting for a while now, that the market keeps hitting all-time highs, that it's due a correction and so on. So I think all these factors are kind of swirling together and are what caused the downturn on Friday. The only question is how long it will last, but your guess is as good as mine, and I think in the end it will just be another buy the dip opportunity. Okay, so that's all I wanted to cover for this video. Let me know what you'll be buying, especially if the market continues to go down. Are there any stocks that you're eyeing at certain valuations? And thanks for watching and hope you enjoyed, and see you in the next one.